Hi everybody. We're on the step 4 of our Loftus 6 steps to financial immortality. The step 4 is obviously decide how much tax you are going to pay. And a lot of people probably sitting there thinking like, is this guy okay? How can I decide how much tax I'm going to pay? Since they take the tax out of my pay packet before they pay me the money, which is the truth for a lot of PAYG people, which means that you work for somebody else. However, yes, you can decide. Now, how? Well, you need to get yourself into some good debts. Remember we spoke about the bad debts prior. Now we talk about the good debts. Good debts are the debts that you get yourself into so you can purchase investments. Margin loans for shares, an investment property debt, so on and so forth. Now, what do they do for you? Number one, they all produce income, dividends, rent, so on and so forth. Also, they give you tax deductions. You see, whatever you pay in interest, you can claim it as a tax deduction. And on the investment property side, as long as the property that you purchase is brand new, you can get depreciation, you can claim the cost of running the investment property as a tax deduction as well. The third thing is you pay it with before tax income. You see, a lot of your bad debts are paid after you pay taxes. But on the investment side, the good debts, you pay before you pay your taxes. So that comes off your taxable income threshold. Now, what's the best thing also about the good debts? You're leveraging your money. What are you doing is you're making your money work for you. Put it this way, if you had spare $100 a week, with the right strategies and obviously depending on your financial circumstances, you may be able to get yourself a $400,000 investment property. Yes, $100 a week. In some instances, not even that. But what that does in the long term for you is you maintain this, you hold this property for let's say 15 years. Now, if the $400,000 property even went up to 600, that's $200,000 a gain. However, on the other hand, if you were only saving $100 a week in 15 years time, you'd be saving like somewhere around 80 grand, just shy of 80 grand. Where that difference come from? Because once you invest your money into a property or even shares, you got other players on your team. You got the taxman, you get the tenants, you get the real estate market, or on the other hand, like you get the stock market, you got the company's dividends and everything else working for you. So yes, in order for you to be able to decide how much tax you need to pay, you really need to get into a decent strategy, an investment strategy that will work for you and that will maximize the benefits and minimize your tax. Thank you.